Hey folks, this is Office Hours with Desiree and Malcolm. This show is intended to peel back the curtain on the home mortgage industry and make the whole process more approachable and more accessible to everyone. Desiree Regusci currently serves as the Business Development Manager for Fortis Mortgage, and among other things, she is responsible for educating current and future clients on the ways in which the right mortgage can help make their home ownership dreams into a reality. Malcolm Ethridge recently began working with the team at Fortis Mortgage as a strategic consultant, where he lends his expertise and perspective as a certified financial planner in helping homeowners with unique and complex borrowing needs understand and navigate the mortgage landscape. In each episode, the pair will discuss a particular mortgage topic, share real-world examples, and give you the perspective of the lender, underwriter, and loan originator. So with that, Desiree, Malcolm, take it away.
Hey folks, thanks for joining us. I'm Malcolm Ethridge, that's Desiree Regusci, and this is Office Hours. On this episode, we're talking about the difference between borrowing to buy a primary residence versus a second home. You too may have noticed that recently it seems that everyone but you and me has a beach house, and you may be wondering how it's possible that the people you know can afford to purchase a beach house while they're still paying off the mortgage on the house they live in currently, especially if they're your neighbor, so you have some rough idea of what they paid for it. Well, today we're going to talk exactly about how to make your beach house dreams come true. So Desiree, before we get started, how you doing?
I'm doing well. How are you, Malcolm?
I am good. Always got to check in.
Yeah.
But before we get too much into the conversation, let's just first talk about whether it's possible to get a loan to purchase a second property, or do I have to pay for it with cash?
It's a great question. I think if we had to pay all cash, a lot less of us would have second homes. I don't have a second home. I don't have a vacation home either, Malcolm. So
you guys heard her admit it on accident. There we go.
Yeah. Yeah. So the answer is yes. You can get a mortgage for a second home.
Okay. So I'm looking for a second home. I already have a primary residence, regardless of whether I'm at the beginning end of that mortgage or the tail end or the middle. It still counts on my monthly debt to income ratio and what is it? Payment, PITI. I know you know
Correct.
what that one stands for, but it's principal, interest, taxes, and insurance. Did I get that
Correct.
right? So all those payments in combination make up how much I already owe a bank for a house that I own. And now you're telling me I can go out and do the exact same thing a second time to purchase another house, and I'm going to somehow live in both of them.
That's essentially, yes, that's it.
Okay. So how do underwriting requirements change when considering a second mortgage versus a primary?
Got it. So really the process that you went through on your first mortgage, nothing about that's going to change, right? You're still going to have to, pull a credit score. You're still going to have to fill out an application. You're still going to have to do your debt to income. So we're going to have to see how many liabilities you have out there. We're going to have to see how much you're making a month. And so all those ratios still come into play with a second home. But now what you will start to see change are some of the requirements or the guidelines. So typically, you're going to have a little bit of a higher credit score. Maybe those lower credit score mortgage that you may have previously gotten on the first one is not going to fly for a second one, right?
Sure.
Because of course, holding two mortgages, you're now higher risk. So they're not going to want to have higher risk with a lower credit score borrower. So keep that in mind. Some lenders will also more than likely want to see more reserves in your bank accounts. They're going to want to know that you're are able to cover at least a certain amount of those mortgage payments in advance if something were to happen. I mean, let's be honest. If you have a second home and you lose your job, what are you going to pay first?
Yeah.
Your primary, right? The secondary is going to be the secondary thought if you don't have the cash. So they're going to want to see a certain amount of reserves in there. And then also higher down payment. So maybe you had a 3 or a 5% down payment on your first home. Now you're going to be working in more of the 10% range. Some will even require 15. So you're going to have the cash to put down now. It's a lot more money to buy that second home than it was the first time around. Oh yeah, sorry.
So stronger.
I was just going to say the last one is really just distance away from your primary residence, right?
Okay.
If you buy a house 2 blocks down, they're going to say, is this really a second home or is this an investment property? So I think a good rule of thumb that they're probably going to look at is a minimum of 6 miles away from your current residence or your primary residence. And of course, anywhere like a beach or a lake or like a vacation community is obviously going to work in your favor.
Okay, so let me go back to something really quickly before I jump forward to a couple other nuggets you just put in there that I want to also make sure that we unpack. But as far as loan to value, you were saying, you know, traditionally, if I'm buying a primary residence, I can get away with putting down 3, 5, 10, maybe 15%, not the 20-80 rule that people are a little more used to coming out of 2008, 2009, right? Where lenders were a little more strict, and then they've kind of loosened up a little bit and we've gotten lower thresholds. But it sounds like you're saying I have to be prepared to put down at least 15%. Is that safe to say?
I would say plan for at least 10. Some, depending on some lenders, you may have to do 15.
So prepare to put down at least 10, probably 15, and don't be surprised if it requires even more than that based on things like credit score and anything else, as you mentioned, that balance.
Yes, correct.
But then separately from that, on the new mortgage that I'm purchasing, you were mentioning the reserve requirement. So not only do I have to have enough cash put to the side to put a larger down payment toward this thing, I've also got to have enough reserves after I close on this mortgage and put down that 10, 15, 25% to also be able to prove that I'm solvent enough to take care of both mortgages if something was to go wrong, and I can cover a few months of carrying both mortgages till I get things back to normal. Did I get it all?
Yeah, you got it all. Yeah.
Okay. So now let's jump forward a little bit. You mentioned the idea of a rental, right? You don't want it to be too close to the house you live in right now. 6 miles doesn't seem like all that much, but depending on the town you live in, the beach could be 6 miles away from where your primary is, and you really just want to be that close, right? But in other instances, like you mentioned, you could be planning to use it as a rental property. So could you say a little bit about the difference between I'm buying a second home, planning to use it, I want to go to the beach with my family in the summertime and whenever else the weather's nice, but I'm also thinking in the off season, I may rent that property a few times a year, a few nights a year to make up some of the difference. I imagine I'm going to get treated a little bit differently if I'm going to have renters in there, even if only part of the year, versus if it's going to be my second home and just for me and my family's personal use.
That's a great question. So the main points with a second home are just that, like we mentioned, right? The distance. You cannot use rental income to qualify.
Okay.
It cannot be held under or a part of a timeshare. It cannot be run by a property management company who has full year-round access to book bookings on it. So you have to be in that property a good portion of the year. That is the requirement.
Okay.
Now, what you end up doing with that later on, or end up doing with that as you kind of move forward into it, but you do have to inhabit that space for a good portion of the time year round. So, you know, it can get sticky. You want to make sure that you're obviously utilizing it for that, because really, if it's not, you don't have any intention of using that property, or you stay there one weekend a year, that's an investment property. That's not a second home.
And it sounds like you're making a distinction that an investment property is going to be treated completely differently from a second mortgage from an underwriting perspective, which was already being treated completely different from a primary mortgage in the first place. And so we've got 3 different mortgage types for 3 different scenarios that we're discussing here, right?
Yes, that's correct.
Okay.
And so without getting too deep into the investment property side, again, credit scores, higher down payment amounts, all of that's going to continue to rise when you start talking about an investment property. And then of course, like anything else, which I can't speak to, I'm not a professional in this, but again, you have to remember taxes are going to start to change for you with your primary residence, a secondary, and an investment property.
Okay. So you mentioned though that we've got now the banks like to see the vacation property be near an attraction like a lake or a beach or something like that. And that got my wheels turning. So are there any types of homes that lenders prefer to lend on, from an underwriting perspective for a second home, whether it's, again, like you said, single family in the middle of town versus a beach versus a lake versus a ski ski resort or anything, like any kind of attractions like that?
Word preferred versus anything else. But what I can tell you is you're not going to get a secondary home loan on a duplex or triplex, right, in the middle of the city. Why would anybody need a duplex as part of a secondary or a vacation home? So you can probably just cut that out of the equation. But I think it just makes if there were to be any questions about the property, it's going to make it easier if it's pretty transparent that it's absolutely a vacation property, right? It is by the ski slopes or the beach or a lake or whatever else it is that might be warrant that. It makes it easier. The underwriters see it, they're going to know what that's for, and it just makes sense.
Okay, so it's not necessarily that they prefer one or the other. It's more so just this helps to make your case.
Correct. Yeah.
Interesting. Yeah. So as we're talking about this, I'm thinking there's probably tons of people, as I mentioned at the top of this, that have gone out and found themselves a vacation property, a second home, a beach house, all the above, whatever it is, because of the pandemic forcing us out of city centers and to more serene environments where there's a little bit more land, there's a little bit to do, and you're not up against your neighbor the way those of us, at least in a city like myself, are. You're bumping into your neighbor every time you walk out of your front door, right? And so, do you have any success stories maybe that you like to share where maybe a client approached you, didn't realize that a second home would be treated any differently from purchasing a primary, as an example, and you help guide them through that process, and or they were having a conversation with you, didn't think a loan would be possible in this circumstance. They thought maybe they'd have to pay cash for the property completely, and maybe you helped educate them and get them into a loan instead of having to deplete their savings to do it.
Yeah. So one recently that I had was a client who wanted to talk through buying a second property, and really the property for them was just to be closer to their daughter, where she was going to college, and they were just going there so often that it made, they were spending a ton in hotels anyway. So I think that really they were trying to figure out, is that even an option? How are they going to treat that? What are we going to have to do? So we talked through the same as you and I just did, right? What are the requirements? What are the guidelines? I think maybe the sticker shock on that down payment amount was hard in the beginning, but again, we kind of worked through it and being able to adjust that purchase price, right? So that it makes the most sense for how much they were willing to let go of for that cash to close. But ultimately we were able to make something work. That was a property that they were going to be in for a very good amount of time during the year. And then during the summer months, their daughter was going to live in it, also kind of back and forth. So it was being utilized solely by her family. And they were really getting some good use out of it. It was, they had the cash to do it. Their debt to income was at such a level that it was fine. It was just having a conversation, sitting down, planning it out. Where was it going to be? Really, what were they using it for? And at the end of the day, it worked out and it made sense. So they closed on one in the summertime, and they're very happy.
You actually just made me think about a totally different scenario that we hadn't really talked about. We've been talking about vacation property as the reason for the second home. But as you're saying that, I'm thinking about some of my financial planning clients who have kids in college who have decided to purchase a property where their kid is in school rather than having them rent. They have the kid, the parents buy the house, have the kid living in the house in that college town while they're in school. And maybe they have a friend or two rent a room, in the property as they're going through school. And they use the second mortgage for that reason too, not just this is a house that we're going to buy because we want to go do fun stuff. So interesting that you could also apply it, you know, in a more constructive, I don't know if constructive is the word. Going to the beach is also constructive in my opinion, but you know what I mean? Like a little more like a strategic way rather than the typical ways that, you know, we discussed at the top of this.
Yeah. I wish my parents had a second home I could have lived in during college.
Yeah, you and me both. But you know, for who it works, you know, like you mentioned, the income is important, the credit scoring is important, but for those that it works for, it's an awesome thing when you can pull it off.
Yeah, absolutely.
Well, that's going to do it for this episode. Thank you, ladies and gentlemen, for joining us for another episode of Office Hours. I'm Malcolm Ethridge. She's Desiree Regusci. And Desiree, remind people where they can find you if they have questions or want more info after this goes live.
Yeah, absolutely. So you can find me on LinkedIn, Desiree Regusci, or you can email me at Desiree@fortismortgage.com.